The terms vacant and unoccupied refer to the status of a property, and they can significantly impact homeowners' insurance coverage. Here's an explanation of the differences between these two terms and how they can affect your insurance policy. Vacant versus unoccupied property. Vacant property. A property is considered vacant when it is completely empty of people, furniture, and belongings, and there is no intention of moving back in or occupying the property soon. Example: a home that has been abandoned, or a property that is being prepared for sale and has no personal property inside. Vacant properties are typically considered higher risk by insurance companies because they are more susceptible to damage due to vandalism, theft, or undetected maintenance issues like a burst pipe. Unoccupied property. A property is considered unoccupied when it is empty of people but still contains furniture, belongings, or personal items, indicating that the owner intends to return. Example: a second home, vacation home, or a home where the owner is away for an extended period, on a long vacation or business trip. An unoccupied property is generally viewed as lower risk than a vacant property since it still contains personal belongings, which might indicate that the owner plans to return. However, insurance coverage may still be limited depending on the length of time it remains unoccupied. How vacant and unoccupied properties affect homeowners insurance. Standard homeowners insurance and vacant/unoccupied properties. Most standard homeowners insurance policies are designed to cover properties that are occupied on a regular basis. If the property is vacant or unoccupied for an extended period, typically 30 or 60 days, many insurance companies will apply limitations or exclusions to the policy. Why this happens? Insurance companies view vacant and unoccupied properties as higher risk. For vacant properties, risks like vandalism, theft, water damage, or even unnoticed fire hazards are greater because there is no one living there to spot potential issues. For unoccupied properties, while there may be fewer risks, there are still concerns about delayed maintenance or unnoticed damage. Vacant property coverage. If a property is vacant for an extended period, usually 30 days or more, most standard policies will either exclude coverage or reduce coverage for certain risks. For example, vandalism, theft, and certain types of water damage might not be covered under a standard policy if the home is vacant. To address this, you may need to purchase a vacancy insurance endorsement or a vacant home policy to ensure full coverage. These types of policies are specifically designed to cover vacant homes, offering protection for risks such as vandalism, fire, and water damage. Unoccupied property coverage. While unoccupied homes may still be covered under a standard homeowner's insurance policy, there are often time limits or special conditions tied to this status. If a home is unoccupied for a significant period, 30 to 60 days, the insurance company may require the policyholder to notify them and possibly adjust the policy. In some cases, insurance coverage may be limited for risks like vandalism, and additional coverage, such as a seasonal or second home policy, may be necessary. However, unoccupied homes are generally viewed as less risky than vacant homes, so the coverage restrictions may not be as severe. Key considerations for insuring vacant and unoccupied properties. 1. Notification to insurance provider. It's important to inform your insurance provider if your property will be vacant or unoccupied for an extended period. Failing to do so could lead to a denial of claims in the event of damage. 2. Extended absences. If you plan to be away from your home for a long period, during a vacation or while renting the property, check your policy to see if it includes any exclusions or limitations for unoccupied homes. You may need to purchase additional coverage or make adjustments to your existing policy to ensure you're protected while you're away. 3. Vacancy endorsement or separate policy. If your home is vacant for more than 30 days, for instance, you may need to add a vacancy endorsement to your policy, or you may need to purchase a special vacant property insurance policy. This will ensure that you're covered for risks like vandalism, theft, and other hazards that may not be included in a standard policy. 4. Security and maintenance. Insurance companies may require that certain steps be taken to reduce the risk of damage. For example, if a property is vacant, the insurer might require that the property is secured, the utilities are turned off, or that the home is periodically checked for maintenance issues. All this information and more can be found in the KISS Public Claims Adjuster Guide. Click below to get your copy today.